Don't go catching FOMO, ladies and gentlemen. This is the Stock Market Brief Show. My name is Michael Silva. If you're new here, well, we use technical... Alrighty, everybody. Welcome back to the show. We start off here at the market dashboard, and then we're going to work our way... We're going to work ourselves through the remainder of this show. We're looking at the 11 sectors. Well, what do you know? Energy caught a huge bid today. Yes, it did, up 3.44%. Oil was up tremendously there too as well. Talk about a lot of volatility, but hey, what did we talk about yesterday? Energy, right? It's been on a monster run up all year. We were looking for a pullback, and you want to buy into this strength, right? So that's what happens. You know, uptrends, higher highs, higher lows, and so forth. Okay, what else took place? Well, we have the defensive names towards the bottom. Makes sense given the just massive run up in the market, okay? So the only thing down on the day, oh, the VIX, oh my goodness, okay? Now, this was a very large day for the S&P 500. Last couple of days coming off this bottom. This is an interesting chart that I want to share with you. Why? Well, it's a 3-day rate of change. 3-day rate of change on the S&P 500 is at 5.72%. That's a pretty large move in the last 3 days within the S&P 500. So I'm like, okay, you know, when's the last time that we've seen moves like this? Well, that's what the rate of change indicator allows us to see. Then I apply some of these blue vertical lines, and all these blue vertical lines on the screen show you the last times that this has happened. And as you can see, you know, it's doing it right here, but we've done it here, we've done it here, a couple of times here, and then throughout the Great Recession too as well. And what you'll notice, a lot of the times it was actually trying to catch and move from bottoms most of the time, right? So when we're in bear markets, right, when we go through massive periods of volatility, it's likely to see rip your face off type rallies. This is where that kind of comes from, right? Where we say, you know, bear markets produce some crazy rallies. Now, in this case, we actually saw it tag a few bottoms and come out of a bottom because strong momentum, you don't want to ignore that by any means. So you got to think about what type of trader you are. Are you a short-term trader? Okay, because a move like this can get faded. Are you a medium-term trader? Okay, well, you might be able to look for a very small pullback or, you know, wait for prices to tighten up to add it to a, you know, more to a position. Or are you a long-term trader with this type of stuff does mark potentially close to some sort of a bottom where you're like, okay, well, we're already down from this peak. Now we're down here starting to see some strength. I want to add to my portfolio. That makes sense too. There's so many different ways you can go about it. But why I'm showing you this is simply because we've marked bottoms like this before, but also keep in mind here, the pandemic, right? This was coming off, you know, if you remember the pandemic, we actually came down pretty hard and fast. Then we started to recover. That was where we got that rate of change. And then we headed a lot lower. The same thing goes with like right here going into the Great Recession, right? So we started coming down and then we started seeing more stronger bear market rallies where it took us some time to get out of that. But overall, I mean, when you really think about it, you know, from here to say here, it's, you know, less than a year's time when we started seeing that market volatility. So if you're a longer term trader and you're like, yeah, no, I can deal with this type of volatility to see a nice move from, you know, to the upside. You know, there's just different ways you can interpret a chart depending on what type of trader you specifically are. Tomorrow is quad witching day. Well, what is quad witching? Well, quad witching is simply when you have a simultaneous amount of things expiring. So you get stock index futures, you get options on those stock index futures, and you get single stock options and index options all expiring. So you're going to get repositioning taking place in the markets. And you got to wonder, okay, are people going to be as bared up, or are they going to get rid of these, you know, bearish positions, which is going to cause more of a rally to the upside? I mean, let's take a look here what has happened in previous quad witching days. Okay, and as you can see, it actually sometimes marks bottoms for the most part. You know, it has, or you see a pretty significant move to the downside, and then you start, you know, slowly coming out of that bottom. Now you can see it here, right? So we boom, right here was a bottom, came down a little bit lower. So there's just more volatility overall. And now we're having our very first quad witching day of 2022. The big difference that I see here among other charts or other times that it happened is these were coming down from, you know, somewhat down moves, right? So down moves, for the most part, down move, you know, down move, down move. we're going into quad witching on an up move, which, I don't necessarily know if that's bullish and or bearish, but it's something to consider. We'll get more into these charts, but I wanted to visually show you, what takes place. What you'll notice right out of the gate is volume. You get volume spikes, right? So you get a lot more positioning. So, it's a time to really, if you want to add to long-term positions, if you want to, jump into this volatility intraday, be my guest. It does get a little wacky and wild there. So just be mindful and be careful, and we'll get into those shorter term charts here to kind of give you an idea of what I'm thinking. I have to share this quote, or I have to share this tweet by Meet Kevin. I found this very interesting, and a lot of people aren't going to catch this, okay? But I need to point it out because there's a lot of psychology to this too as well. So first and foremost, it almost seems as if he's more interested in just being right and proving the trolls right or wrong or whatever the case is. Understandably so, because he got a lot of hate for quote unquote flipping and flopping, which makes sense if you trade within this environment. It's different if you're a short term, medium term, or long term. But what I want to call out that I don't think anyone's doing right now is, well, first and foremost, he said he's back in it, 21.5 million in the market right now. Okay, so I'm calling out the day performance. Okay, 5.35% up on the day. A great day, and a lot of people are going to look at that and be like, oh, I got to do this. I want to see those big gains, especially when the S&P 500 was up 1.23%. But hear me out. If you're talking 1% in the S&P 500, right, so SP 500, and you have Kevin's portfolio hitting a 5%, what beta is that? I mean, we're talking 5x beta over here, 5.0, 4.0, right? I haven't done the math, but we're talking significantly higher beta to the overall S&P 500. What does that mean? Well, that simply means this. If the S&P 500 or whatever he's weighted in, you could maybe potentially look at the NASDAQ composite. And if that's the case, let's take a look. NASDAQ composite. NASDAQ 100 was up 1.16, so pretty close. Composite was up 1.33, so it's fairly close. So it's still around a 5 beta. If we have a 1% down day, he can have 5% down day, which means you wipe out $1 million in a day, which is absolutely crazy. I mean, in my opinion, right? So, it's all opinion based. He likes these higher beta names, but understand this. If you're not paying attention to the beta of your portfolio, if you can lose 5%, 10% of your portfolio in a single day, I mean, how can you ever scale up from that point, right? It becomes very, very difficult if you can have a 5% drawdown. Well, I should say, if you have a 5% drawdown, it takes about 5% to get it back. But the more that these drawdowns get larger, so if you have a 50% drawdown, right? That's a huge drawdown. It takes 100% to get it back. So it becomes progressively harder. And what I'm trying to point out here is we are in the midst of massive volatility. And he's celebrating here, calling that he got into the bottom, where I don't know if he's just short-term trading this, but he says 21.5 million in the market right now, as I promised. He didn't say he got out of the position, so he's still in it. All right, so if this market reverts on us, he made an entire video. It's hilarious. It was actually pretty cool, and good for him. But I want to point this out. Let's look at the S&P 500 and why you shouldn't get overly excited right now. Right? So if you caught the bottom, you rightfully so, you should be excited. But if you're not taking any profits off the table from this move, right, and you're short-term trading, that could be very dangerous. Even if you're, adding into positions or long-term, whatever the case is, you need to understand that the rate at which this move does not happen frequently and it doesn't typically happen for long periods of time, right? You get maybe a spike like that, but the percentage moves from this point typically, get smaller. Now understand this. Right? You're celebrating, which is fine, but understand that we're still within a very difficult environment here. We still have lower highs and lower lows. We did call this out. It looks like 2008, very similar, where we can get this big move in March to April, and we're starting to see that big type of move, okay? To call out, I wouldn't be afraid to shorten this market environment. I took a stab today and then, basically moved my stop to break even because it went down, but then I ended up getting stopped back out. Then more towards the end of the day, I started looking at it again. Tomorrow, I'm going to be looking at it again too as well. But yeah, we're breaking out of this. We're seeing some strength. Positive divergence is playing out. RSI is back above 50, but where are we? Well, we're not even back above the middle of this channel yet. We're still below all these moving averages right here, right at around 440.50 and 4,500 on the SPX. Okay, so it can go up a little bit higher. Yesterday we called for what? We called for a higher high and a higher low. What do we get? Higher low and a higher high. Tomorrow, I would imagine we can see something very similar, right? But I don't think that the high is going to be, more reward if we were to enter in here. I don't think that the reward is greater than the risk to the downside going into tomorrow. Okay, now, like I said, this does match up with that seasonality script, right? March and April, so there could be some more upside. This could very well be a bottom, which could make a lot of sense to add to your portfolio if you're a longer-term investor, right? And you just want to hold this out like I showed you that 2008 scenario, how it kept going down, but a year later, it was up. Everything was fine. I want to hop now into the risk ranges to give you a little bit more perspective. Okay, so first and foremost, how do we look at these risk ranges, right? So when we get out of the risk ranges, right, and we're going into quad witching, a lot of crazy things can happen, right? New dynamic hedging can cause more of a push to the upside, but understand this, think of it as a bell curve, okay? So a bell curve, right? So we talked about 68% of the time, it fits, within the risk range. And the risk range this week was, I think it was 14 on the SPY, all right? So 14 plus, 14 minus, right? So we'll call this plus, we'll call this minus. Now, if you get outside of that, the odds of coming outside of it are a little bit less, all right? So think of it this way. If we close within, these areas right here, we're talking only like 26% of the time that we land into that type of deviation, right? So that would be plus, or minus another 14 points coming way outside here, and then plus another 14 right here, right? That would be 2 standard deviations, right? So 1 standard deviation, 2 standard deviations. We typically end up within here, but as you can see, we are trading with outside of that, which there's a lower probability of that technically happening. Okay, so most of the time, the majority of the time, it ends in here. Now, if you zoom out and you're like looking at 1 or 2 standard deviations out, typically 100% of the time, it ends up closing within that amount of standard deviations. Okay. Now, I want to go back to this because what are we looking as far as the market pricing in right now? The market's pricing in a $5.30 move. So 68% of the time, it lands within its risk range, and it's been doing so very well. Now, the quad witching is coming tomorrow, right? So there could be some volatility, but what I want to call out is $5.30. Where does that put us? Well, we closed today at $4.41, and $5.30 could put us just right back very closely to the upper risk range, which can very well act as a magnet. So that's why I'm saying, okay, so would you want to take a position to go long here and maybe we shoot up another $5 tomorrow? Very possible, right? Like I said, I still think that we could see a higher high and a higher low tomorrow, but we have overhead supply, right? We have these 2 moving averages to a declining 50-day, and then we have a pretty high implied vol, right? So we have the possibility where it can come all the way back down here. So my projection, my forecast, right? Don't take this as the holy grail, but I would imagine if we do pop up to another high, I think it's going to be a smaller high, and there's more potential for downside where the candle could look, fill in within that type of range right there. Okay. Now, like I said, the more we get out of this, right, this could be some even more short covering to take place. And that's more than possible. Okay. But what I want to point out here is just simply that we do have just some massive resistance up at 450. It took a while to get break it, and we broke it, and we back tested it right here. So we very well might just be looking to come back into that zone, right? That's just revert to the mean. And that's more than possible, but be mindful that the mean can very well act as an area of resistance, okay? That is what I'm trying to get at here. I'm just bambling on, but the BPSPX chart, it's kind of moving into that overextended territory. Still has a little bit more room to go up. The VIX came off today slightly, in percentage basis terms, 3.75%, almost filling this gap. Maybe perhaps we get that tomorrow. If we do get the gap filled tomorrow, maybe we bounce from that area. Now, also take note that we still have a positive divergence as this is wedging fairly tightly too as well. Okay, so if I'm right about $5 to the downside or coming back into the risk range, this would obviously fire off. At least that's what I would expect. Another thing to note is the SPIP over GOVT. This right here we like to look at because it sometimes helps us, give an insight that there might be incoming volatility. And I couldn't tell you exactly why, but it's a correlation that I found, right? When we get above this rate of change, which is around 1.3, 1.4, you can see I've highlighted them in red and with the pink circles. bam, we got volatility shortly after, bam, volatility shortly after, bam, volatility, bam, 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 right here, bam, and then we started coming off, which actually, we talked about this on a prior episode. We said, okay, it kept on going basically parabolic. You know, when's the last time this happened? So we looked back and we said, well, actually, the last time it came there, volatility started to come off. I wish I had that episode, or which I knew which one that was, because I'd show it again, but started coming off. Okay, now we're crossing back above. Could be an indication that we might see some volatility once again pick back up in the very near future. Okay, a couple other things here. Housing index. We're looking at another negative divergence, right? So we called out this divergence, we called out that divergence. Now we are seeing the S&P 500, you know, break to another high here. Still can have room to form, but you can see, you know, matching highs to potentially a little bit higher. So it would go from a high to a higher high. And then this is clearly a high to a lower high as it stands right now. That is another divergence taking place, which means to me that if it plays out like this, right? If it's played out how it has these last two times, it means that the S&P 500 could still have some downside. So this big straight move to the upside can very well get faded. All right, let's look at SPX over TLT. All right, this is the ratio that I like to look for divergence. So we look at the ratio, we match it up with the S&P 500. The last time we pulled this up was this divergence here, right? So when the S&P 500 has a higher low, a higher low, and when the S&P 500 TLT ratio has a lower low, that is a positive divergence taking place where we could very well see the S&P 500 move higher. And guess what? It moved higher. Hey, so it's not a holy grail by any means, but I'm calling this out now because look at the ratio. It is ripping to the upside. So they have basically matching highs here on the ratio, and clear as day, it's not matching back up to this high, okay? And the last time we seen a divergence from this perspective, well, actually the last time was right here that we saw it from this perspective, and the S&P 500 came down, but a bigger divergence was right here. I gotta highlight that one, I forgot to. You could see the higher high in the S&P ratio of TLT, and then the lower high here, and guess what? It went to the downside, okay? So it's something to call out. Like I said, it's interesting data. You can ignore it, you can do whatever you want. But I'm just putting the pieces together, okay? I look, and most people don't understand this, I look for bearish and bullish ideals, and then I just start stacking them up, okay? Which one has the most? And as it stands right now, I mean, the bulls have the short term, but we're starting to see that we can potentially be walking into a period where we see, you know, a pullback in this euphoric rise. Okay, so take a look here, the NYMA. This is the NYSE McClellan oscillator. Okay, we've been ripping back right there within the New York Stock Exchange, but take a look here, okay? We're getting extended. We haven't been to this reading for quite some time. We'd have to look back into the chart, and when we do look back into the chart, I can assure you that that's actually somewhat of an overextended reading. Makes sense given this big move, and we talked about this bullish divergence. The bullish divergence, bam, played out, okay? Cool. That's why we watch these things all together. Let's take a look at the IWM. Home sweet home indeed. Look where it's at. Upper risk range, tagged right there perfectly. The other ones were getting outside of it yesterday. So what did we say? Well, it seems to me that the IWM now has the possibility to potentially reach up there too as well. And well, we basically closed right on it as it stands. So can this go higher? Can it reach outside of it? Yeah, absolutely, right? Like I said, quad witching day, but as it stands right now, just be careful because if we look at the shorter time frames, that is a very strong move. So to see it pull back a little bit, you know, it's totally normal. So if you believe that we are going to be moving further out of this and you think we're going to go up, right? Wait for price to come to you. Be patient, okay? All right, let's continue on to the Qs. So the Qs also coming out of this risk range, right? So if we look at it like that, oh my God, that's a horrible bell curve. If we look at it like that bell curve that we were talking about, right? Bam, it's technically, it'd be more like that. All right, so this is within it, right? 68% of the time. And now, you know, if we start getting out of it, it's a lot, you know, it's more rare, but it does happen. It happens on a less percentage basis. It happens less on percentage basis terms, but we're there right now. But we are pricing in a $5.12 move just going into tomorrow. So is that going to be to the upside, which, you know, would be more of a deviation outside of this risk range, or will it be coming back right to its happy place right down here? Well, you know, it's very hard to say given that it is quad witching, but understand the context that we're in is still lower highs and lower lows. And to note that I haven't even noted yet. We're seeing a big move from the upside, right? And it could potentially get faded. We don't know. But look at this move. Boom. That was about, a 10% move. That was about a 10% move. This is about like an 8% or something like that move. Okay, so that move got faded. This move got faded. We're in bearish context. All right. We're getting outside of the risk range. All right. This could very well be a bottom, but that doesn't mean that we can't see a short-term pullback. Okay. Let's continue on. More to that note, BPNDX. All right. BPNDX getting overextended. We like to look for that RSI to get into that overextended territory. It's at 69.62. Overextended, can't stay overextended for quite some time, but just respect that it is there, meaning that there could be much more actually less reward to the upside than there is risk to the downside as it stands currently. Okay, let's look at the NAMO. The NAMO is the NASDAQ McClellan oscillator. Okay, NASDAQ McClellan oscillator is getting a pretty high reading. When we get high readings, we've seen pullbacks take place. Boom. This one actually went further, then pulled back right here. It was right. Boom. Okay. And now we're getting back up into those levels again. It's not quite like full-blown overextended, but it's getting there. And we did talk about the bullish divergence that was taking place, and we're starting to see it play out right now. Okay. A lot of stuff going on. We're going to wrap this up in the conclusion section. Welcome back. So the sailor to shift ratio remains on that buy signal, right? We're still trading within last week's candle. So not much has changed overall, except we are holding strong as it stands. Now, like I said, right, when this signal triggers, sometimes people like to front run it. And I said, if you do like to front run it, you can look at crypto equities. And crypto equities these last couple of days, you had time, right? They've been ripping. So be mindful that, yes, we've been seeing some big moves. Can it continue? Obviously, but we've been seeing aggressive moves. Typically, those moves need to get digested. So what does that mean? It means just be patient. Don't get FOMO, right? Be careful. That's all I ask, is everyone just to be careful and manage their risk. And sometimes if you're managing risk and you're allowing for like if you think that the target's going to be way up here and you're like, okay, well, I'll wait for like a $2 pullback. Okay, that's a little bit differently if your stop's going to be 20%. So, at that point, a few bucks, per equity or whatever the case is might not actually matter as much to that individual. Let's look at Bitcoin. So the price of Bitcoin still range bound. Now, what I do find interesting is Bitcoin has been somewhat of a leading indicator. All right. And it was actually down on the day. So slightly down on the day. Meanwhile, everything else is a lot up. So that's actually kind of an interesting divergence, but it's still in contraction mode. So we'll continue to see how tight this can get. Let's go to Ethereum. Ethereum also doing a very similar thing. It was up on the day, so that's nice. And it's back within this pennant pattern here, this bear pennant, and it's still contracting within here. So we still got to watch it. Not much price movement, right? It hasn't been doing anything. So there's not much more to add other than what we just said. All right, everybody. I went over a lot in today's episode. Okay, to me, as we move into quad witch, as we see all the repositioning take place, I want to remind you, one, okay, just be careful because it's going to be volatile, right? It's typically volatile. As far as, where's the better potential right now, going into tomorrow, okay? Just tomorrow is what I'm talking about specifically. It seems that there's more reward to the downside, or I should say less reward to the upside than there is risk, to the downside. Now, that can change, right? We can see how this plays out, but as it stands right now in this current moment, that's kind of what I'm seeing on these specific charts, the various, overextensions that we're seeing. The move has been made, and typically what happens is you get some further FOMO perpetuation to the upside, and then it exhausts itself, trapping in those people and then forcing price to go a little bit lower too as well. So that is something that we can potentially see going into tomorrow. My assumption is that we could very well get another high, but I think, like I said, from the previous daily candle, we can have another higher high and a higher low. But just like I just don't think if we do get a higher high, I think it's going to be not too impressive versus the possibility of the downside of the move. Okay, that's just like I said, just my assumption. Anything could possibly happen. But given the context of everything that I'm looking at, that's what I'm thinking going into tomorrow. Remember also, tomorrow's Friday, and if you want to have a good weekend, just take it easy, right? Take it easy on Fridays. All right, everybody, that's all I got for you. Have a wonderful night.